Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to Merryn Talks Your Money, the personal finance edition of Merryn Talks Money. In these bonus podcasts, we talk about the best strategies for making the most of your money. I'm Merryn Somerset Webb. This week, we bring back old friend of the show, Suzanne Woolley from our personal finance and investing team. Suzanne, welcome back.
Thanks. Good to be here.
All right. Now, this week, we are looking at a piece you've written about how to invest $100,000, right?
Yes.
I mean, it's real money.
Yeah. If only I had it to invest, I'd have lots of ideas here.
Yeah, I mean, I like the idea of looking at this and saying, what happens if you suddenly have an extra $100,000? Because we're assuming, aren't we, when we look at this stuff, that the people who are reading this already have money invested in the market. They're bringing in another 100,000 and they're thinking about where it should go. And there's a big change in the way the people who you speak to respond over the last couple of years. And that, back in the old days, when you talk to people about any amount of money, it would just be about which part of the American market to put it in. Right. And now the mantra is diversify, diversify, diversify. One of the people in particular you spoke to this week, the first thing he said was diversify, diversify, diversify. Right.
It's so true. I mean, months ago, it was like Mag 7, AI.
Buy more Mag 7. Buy more Mag 7.
Full bore. Why would you do anything different? Go all in, But that is, I think those days are largely gone. I mean, the people now are much more cautious tone. And a lot of them are, espousing what is a really smart move, which is to diversify internationally. This is like age-old advice. We all know if we study our personal finance history that diversification is really important. You should have a good chunk of your money overseas, but that has been obviously ignored for years, at least here in the US, because of the mania around the Mag 7. And we did have one person this time, Victoria Fernandez of Crossmark Global Investments, who did mention a Mag 7 stock. She mentioned Microsoft, but she also noted that she would only sort of maybe buy it on a dip right now. But most of the people had a more of a cautious tone, and tech was not a major play.
Yeah, well, let's start with Victoria then, because she was actually, of the three that you interviewed, she was the only one that was really still very, very US orientated, right? So there's Victoria Fernandez, she's chief market strategist at Crossmark Global Investments. And when you talked to her, she talked about moving into different parts of the US market as opposed to moving out of the US market.
Yeah, she did. I mean, in tech, she liked Cisco Systems. They are one of the few companies with a dividend, so she likes that as sort of a buffer. And she also likes the fact that their software business has been growing over time and has a higher margin and recurring revenues, which is always kind of nice. She liked insurance, and particularly Progressive Corp, which has seen property and auto lines increase policies at a rate of 18% year over year. And I think importantly to her, because she is still sort of cautious on the market to a degree, Progressive is less volatile than the market as a whole. And then she also liked healthcare a lot and Gilead Sciences. It has an HIV franchise. It's doing acquisitions. It has expanding its lines in business for oncology and liver disease, and it has a dividend. And if you look at what we sort of cannot avoid, it is medical expenses. So unfortunately, that seems like the solid theme.
Yeah, although you want to watch out for getting into names that have a lot of exposure to Medicare or Medicaid in this political environment.
So true. We're in such a bizarre time, There's so much that's in flux and so much uncertainty. And I mean, who knows what's going to happen with Medicare, Medicaid, Social Security? We just don't know.
Yeah, so steer clear of that. Okay, so the second person you interviewed, this is Michael Rosen.
Yeah, Evangelist Investments.
And he's our diversify guy. And he's very clear. He says, 15 years ago, just would have told you to own large US tech stocks. I hope that he did tell everyone that. And I hope they did follow his advice.
Yes, I know.
that era is very clearly done. New era, fragmentation, volatility, spread everything around the place.
Yeah, he advises diversifying your geographies, your currencies, your sectors, your strategies. He made the point that the U.S. represents more than 60% of the world's equities, but that is likely to fall. So he thinks you should have half of your equities outside the U.S. including Europe, Japan, China, and the emerging markets. And you will like this, Merryn. A small 5% allocation to gold.
Oh, excellent. Brilliant.
Yes.
Well done him. I mean, maybe a little more, but, everyone's getting with the program now.
No one's perfect, Merryn.
No.
Um,
And then he says, I thought this was interesting as well. He says that for a 25-year-old investor, someone who's got a very long time frame, they should be all in on equities. None of this bond nonsense.
If you have a time horizon of 4 years, why not? I don't think he's not saying put it all in the Mag 7. But if you have 40 years, you can ride out the cycles and you can afford to take the risk. If you're more my age, if you add a couple of decades onto there, he's like, well, maybe a more balanced portfolio than we've been advocating for just even a couple of years ago. But when you're young, you're like a bond and you have a lot of years stretching out ahead of you. And so you can afford to take more of that stock-like risk.
Mm. And then he had a really great idea for an alternative investment, which I would say counts as genuine diversification across the asset classes.
Yes, he had the most original idea, I have to say. I don't know about the UK, but eggs have been an issue over here. The price of eggs has been very high and there's just like a ridiculous amount of talk about the price of eggs. And so he's like, well, eggs are still high. Why don't you invest and see what hens might yield? He said with 100,000, you can buy 4,000 egg-laying hens, each producing about 1 egg a day. That's 28,000 eggs per week, or about 2,300 dozen. You sell them at farmers market for $10 a dozen, and that's 23,000 per week of revenue. Realistically, we're not going to run out and do that, okay?
I reckon America's poultry farmers might have some comments to make there about labor costs and the cost of land and
exactly
the cost of sticking to the general regulatory environment around care of chickens, etc. But still,
he was not entirely serious with that.
Well, nonetheless, it's good to think about where you can expand yourself. Yeah.
Exactly. That's true diversification,
It really is. Right. And then you had a third interviewee this week, Jose Rasco.
Yeah, Jose is the America's Chief Investment Officer for HSBC Global Private Banking and Wealth, and he is short-term neutral in the U.S. and more positive on emerging markets Asia, noting in Asia in general, economic growth is better, and he's really focused on this paradigm shift from globalization to regionalization. So he's looking at how China has moved a lot of low-end manufacturing abroad to Vietnam, the Philippines, Sri Lanka, Mexico. He also has a modest overweight in Europe, particularly in Germany. And in the sort of emerging markets area, he loves India, which, we've heard about people loving India forever because it's young population, a lot of productivity to come. But as he notes, we need them to open up their markets a bit more. But
yeah, and that's an expensive market. The positive story is a really compelling one, but that is not a cheap market.
No, he's sort of looking at the 5 to 10 year horizon. In Europe, he's really looking at industrials, aerospace, materials. This is, a defense play to a big degree. So that's where he was at. And his alternate idea, we asked people what they would do with $100,000 if they could do something fun, also fell on a theme because 2 of these people said they would buy a luxury Winnebago. I don't know if Winnebagos are these large RV, little silver bullet buses that you can drive across the country and park.
I know, we love them. We don't have them, but we love them. Right, now you had one last guy, Matt Maley.
Yes, Matt Maley at Miller and Tabak, and he is their chief market strategist. And he struck a cautious note. He said he would put 10 to 15% in cash because he feels we're at a key inflection point where it's going to be hard to push higher anytime soon. So he wants some dry powder if we get another leg lower. But the one area he really liked was interesting because he was saying firms like Blackstone and KKR, in sort of the private market space, private equity and such, whose stocks were down 40% at their lows, they haven't bounced back as much as the rest of the market. And he acknowledges that some of these stocks are having a rough time and it could get worse, but he feels like how much lower can they go? And also, if we do slide into a unhappier period in the markets, these are the firms that jump in when there's sort of blood in the streets. So his feeling is, he wouldn't run in and buy them right now, but he feels that their stocks have already priced in a lot more than you see in the broader market. And so he would nibble at these stocks and dollar cost average into them over the next 6 months. So he would take a very disciplined approach to averaging into them over time.
Yeah.
He talks about Boeing, which is interesting because it's been such a loser for a long time. And his argument for Boeing is a long-term one. And he's like, well, it's one of only 2 commercial airline makers in the world.
Yeah.
And it's important to the defense industry. And he's like, it's too big to fail.
Will always be rescued. But on the other hand, it being rescued may not always be good for shareholders. Not that there's any reason for it to be rescued right now, but you know what I mean?
Yes, I take your point. But he thinks that Europe is building up defense. A lot of American contractors will be part of that. And he feels like the stock is finally stabilizing. It's definitely a longer-term play. His advice there is to buy a little bit once a month, every month of the year, and sit on it for 5 years.
He's a stuff guy, right? So in his alternate idea, he's not. I mean, he does mention Winnebagos as well, renting one of those. But actually, do you know, here he is. He's saying that he'd go real estate. Real estate is always good, unless you put into trade in the 1970s, of course. He'd buy something in Mississippi, something in Alabama. And then he does exactly what we were just talking about. This guy would like to rent a Porsche.
I know.
Yeah. Oh, not buy a Porsche, rent a Porsche. Okay, that's an experience thing. I'll give you that.
I know. I guess it is an experience thing. Yeah, he'd love to rent a Porsche and drive as fast as he could on Germany's Autobahn, which is a fantasy I know a lot of car people have.
The last car I drove as fast as I could on an Autobahn was my little old MX-5 Miata. You called me in the US, and I don't really go that fast.
How fast? How fast did it go?
The speedometer goes up to 180 kilometers,
gosh.
and we certainly got it beyond that, but I reckon I could go a lot faster in a Porsche.
How fast can you go in a Porsche is my question. I'm not sure.
I don't know. Listeners, let us know how fast you've been in your Porsche. In fact, listeners, here's the challenge. I want to hear from you. I want to hear from people who've driven as fast as they can on Germany's Autobahn, and I want to know who's gone the fastest. We're going to report on this next time Suzanne and I get together. We're going to name the person who's gone the fastest. So let's do that.
All right. I love that.
Yeah, it won't be me and it won't be Suzanne, but I know it's one of you. Suzanne, thanks so much for that. That was really interesting and incredibly useful. Great ideas.
Oh, great to be here. Thanks.
Thanks for listening to this week's Merryn Talks Your Money. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also be sure to follow me and John on X or Twitter at MerrynSW and John_Stefik. This episode was produced by Sam Asadi, production support by Moses, and questions and comments on this show and your top speed are always welcome. Our show email is merrynmoney@bloomberg.net.